Hello and welcome to Macro Sutra. The US Fed Reserve, which is somewhat equivalent to our central bank or the RBI, raised interest rates in the United States by 75 basis points or 3/4 of a percentage. That has sort of shaken global markets, world economists, and sort of asked a lot of questions of economists. So why is America raising interest rates, and that too by 75 basis points or 3/4 of a percentage, such a big event? And why is the world so shaken by it, and including India? If any of you track stock markets, you can see what's happening in the stock markets. You can see what is happening with the rupee hitting record lows every other day. Why is this big news? Why does it matter? And what next is what we are going to discuss today with Radhika Pandey on Macro Sutra. Radhika, the biggest interest rate increase in almost 3 decades. The last time was 1994. What pushed the US Fed to go for 75 basis points?
Yeah, so basically the inflation has been rising in the US, and since the second half of last year, inflation has been rising, and the US Fed has been communicating that now they are going to reverse their ultra accommodative monetary policy, and sooner or later they will start raising rates because inflation has been inching up. But what happened was that in the month of May, the recent inflation print rose to an all-time high of 8.6%. And that triggered this concern that now the US Fed has to act more aggressively on interest rate hikes in order to bring back inflation to the 2% target, because US Fed is also an inflation targeting central bank, and their target is 2%. Inflation has risen way above that. Another point to note here is that, just before the May number, the April number, we saw that inflation had slightly cooled from March. So in March, the US CPI came in at 8.5%, but in April it went down to 8.3. So there was this discussion that maybe inflation has peaked.
Okay.
It has reached its highest level, and from now it will come down. So there were these expectations that maybe the US Fed will go slow on raising the rates, because we know that aggressive rate hikes also has impact on consumption spending, cutting discretionary spending, raising the loan rates, and so on. So there was this expectation that maybe the US Fed will go slow on its rate hikes. But when the May data came, which the print said that it was 8.6%, and that too it was a very broad-based increase. It was not just driven by, say, gasoline prices or one or two segments. It was a broad-based increase, and that resulted in the US Fed raising rate by a massive 75%.
Because I think the general expectation was 50 basis
Yes.
points, and now the Fed chair has said that there could be one more 75
Basis
basis
points
point
hike.
hike in the
Yes.
next cycle.
Yes.
So that's very steep.
Yes. So, and the good part is that they have been communicating to the market that they are going to raise rates, and in their language they say it's a supersized increase in rates, very aggressive 75 basis points hike, and as per the current communication, they do expect another 75 basis point hike in the July meeting, and after that maybe they will make it 50, and going forward they'll make it 25. So they want to bring it down to 2% as quickly as possible, and with that the interest rate is going to rise. So currently it is around 1.5%, and if we look at the projections of the US Fed for the end of the year, they want to raise it to 3.5%. So another, say, 165 or 1.75% rate hike is expected by the end of the year.
Calendar
year, yeah.
Okay, so that's
Yes,
severe, steep increase. Like I was saying in my introductory points, Radhika, that the world is a little shaken by this, emerging economies, even developed economies, and specifically for us here, since we are more concerned about ourselves, India and the Indian economy, The impact has been immediately seen in the stock markets and in the value of the rupee. But you talk about in your column, which we have published on the print in this morning, and it is there. It will be there in the notes of this show after this. You mentioned narrowing interest differential, and this will lead to faster FII outflows, because FII outflows have been going on
Yes.
since the beginning of this year. Every month we see several thousand crores of outflows. But why will this lead to? Because I mean, it's a very simple question, because interest rates are higher, but how much more can they take out?
Yeah, so the pace of outflow will depend on the interest rate differential. So if we
Can you explain that to our
yes,
viewers?
yeah. So interest rate differential, we can say what is the yield on a US denominated bond, say a dollar denominated bond, and a rupee denominated bond, say for any maturity, say a 10-year US bond minus a 10-year rupee bond. So just if we look back a little, if we go back 2 years, during the pandemic time, during 2020, what was happening was that the US Fed was following an accommodative monetary policy. It was reducing rates. Even during the global financial crisis, they just followed a very eased, loose monetary policy that resulted in near zero interest rates in US and other advanced economies. Now, in the US and other advanced economies, the interest rates were very low, they were zero, whereas in emerging economies, interest rates are higher. So if the interest rate is higher, the foreign capital tends to flow into the economy where the yields are higher or where the returns on the rupee denominated asset is higher. Now what's happening is that now that the US bond yields are also rising because US central bank has been raising rates. So therefore the difference between the rupee bond interest rate and the US bond interest rate is narrowing. And therefore, and because the US bond is more safer, it is risk free as compared to an emerging economy bond, say an India bond. So as the interest rate differential is narrowing, the foreign outflows, foreign capital is flowing out. And with this 75 basis points hike, this differential has further narrowed. The difference between any bond yield, if we compare, say, 2-year bond or 3-year bond or short-term yield, we are just comparing, and what we are seeing is that the pace of hike by the US is much faster as compared to India. Because inflation is a much acute problem in the US as compared to India. Therefore, the yield differential is narrowing, and therefore foreign capital is flowing out of India, and not only India, other emerging economies also, and it's going back to the US. Another important point here is that because of the uncertain environment, the risk appetite of foreign investors is lower. And so therefore there's also a trend to go back to safe haven assets like the US dollar. That's also triggering an outflow. But this 75 basis point has triggered a faster outflow, and that we've seen in the markets tumbling yesterday, and we'll see in the data on FPI outflows also.
But a point that comes to mind here, Radhika, is that the risk appetite is lower, and they think the US is a much safer avenue. But now there is also this threat of recession. How do you balance that risk versus threat of recession?
So again, the threat of recession is arising because again there is a negative appetite for investors, so they are moving out. So even if you look yesterday, what happened initially when the US Fed announced an interest rate hike, for some time Indian markets did well. There was a 600 points rise, and that rise was because they thought that it's 75 basis points, and maybe going forward it would be 50, not 75. So that was the reason. But slowly they started to understand that there's going to be a recession, and that recession is not just in the US, it's going to be a global recession, and that is why foreign funds are flowing out of India and other emerging economies. So it's not just recession in the US, but it's going to be a global recession, and that has significantly lowered their appetite, risk appetite, and that is the reason for funds flowing out of emerging economies.
And that is in turn leading to the rupee also weakening. And
Yes.
we are hitting record levels, 78. We had never seen that.
Yeah.
Which is more bad news.
Yeah, it is more bad news because as it is because of us depending on crude oil imports. We import around 85% of our domestic crude oil requirements through imports. Because of that, rupee is tumbling, and again because of massive FPI outflows, there is less demand for rupee, and that is leading to further rupee depreciation. And RBI is trying to defend the rupee, not allowing it to fall too much, but beyond a point, it has to adjust to market fundamentals. And if you see some of the analysis that is happening on the exchange rate trajectory, there is expectation that in the next few months, rupee could touch 79 to 80. So it's going to be a depreciation. But the point to note again here is that relatively where India stands.
Okay.
So even if we look at India and compare it with some of the other emerging economies' currencies, we do see that India is still performing better. One of the reason being that RBI is aggressively intervening in the market and preventing the rupee from depreciating. But if on a comparative scale, if we find that the pace of rupee depreciation is slower as compared to some of the other emerging economies, say Brazil, South Africa, and so on.
The other point, Radhika, is that this makes it difficult for Indian companies to borrow from international markets. That in turn prevents them from spending, capex, investments, which in turn hurts growth. So this is quite a vicious cycle.
It's a vicious cycle because we took advantage of the lower global interest rate regime over the past 2 years, and especially companies took advantage of the low global interest rate regime. They borrowed a lot through the external commercial borrowing route. So external commercial borrowing is when companies borrow from the overseas markets. So ECB had become a very attractive route for the past 2 years, but now due to double whammy of interest rate rising and rupee depreciating. So our repayment in terms of rupee will increase. So if Indian companies have borrowed in terms of dollar or say yen, and if rupee depreciates, their repayment burden will increase. So as a result, we are seeing that now the companies are going slow on external commercial borrowing, and that would definitely hurt their capex plans because one of the reasons for accessing the ECB route was capital expenditure and modernization of existing plants, and those will also slow down if one of the major routes for accessing finance is closed due to high interest rates.
But would you say that if they want to borrow from within India, they have enough opportunities?
They can borrow. See, what happens is that they compare the interest costs, they compare the interest cost from banks, from the domestic bond market and international markets. Till now, out of all these 3 avenues, international market was the cheapest because there were very low interest rates in the advanced economies. So those companies that could borrow, it's not that all companies can borrow because there are regulations by the Reserve Bank of India on what type of companies can borrow. But even within that, when you see that now the relative attractiveness of ECB will come down because of rising interest costs as well as rupee depreciation.
Last point, again, this sounds like a lot of bad news, one after the other, but unfortunately that is the situation that surrounds us, that is the environment right now. And this is bad news for our exports because if developed economies are not growing, if there is a recession, they will not buy from us.
Yeah.
Whether it is trade or services.
Absolutely. So particularly services, our IT sector, if there is recession in the US, and now, the term that economists use is soft landing. For any central bank at this point in time, the challenge is to engineer a soft landing. That is to see that, you are increasing the interest rates, but to cool inflation, but interest rates should not rise to that level that growth is jeopardized. So if that happens, then there are some concerns that, the US economy economy could sink into a recession. And if US sinks into a recession, then a major part of external demand for India and other emerging economies will suffer. And till now we have seen that our exports have done quite well. We have achieved the USD $400 billion of merchandise exports. Our services exports were quite robust. So one of the sources of demand would suffer if the US economy sinks into a recession. So these are just concerns, and we have to be, again, as the federal US Fed governor also pointed out, that it all depends on data, how US inflation pans out in the next few months, and what are the quantum of interest rate hikes that the Federal Reserve needs to make.
Let's go and take some questions, Radhika. We have quite a few questions. People are concerned about what's happening, and this news about the Fed Reserve hike has been quite widely, received with a lot of worries. Aditya, who's a member for a month now, hello Aditya, says, with rising inflation and also possible fear of US going into recession, don't you think the government, I guess he's talking about the Indian government, should revise its budget targets, especially related to capex?
They will do if need be, but what they have indicated as of now is that they are going to go ahead with the capex. So because currently we are seeing that private investment is, though it is rising, it is still on the lower side. So government capex is one of the major engines of growth going forward. So even if they revise their expenditure or their budgetary projection, they would not like to revise downwards their capex, because till now they have been talking about government increasing their capex expenditure, and although we have seen that due to this increase in costs and all, we have seen that some of the government's capex plans have been adversely impacted. Highway construction, the pace of highway construction has come down because the input costs have risen. But on their side, one of the major planks of development for this government has been capex, and therefore they would not like to revise that downwards. But let's see. I think in the second half of the financial year, they would probably come up with their revised budgetary projections.
Bulbul has a question about which we were discussing before we started the show. Does this mean RBI has been slow in increasing rates? Should this alarm us in India?
So again, we have to understand two important points here. One is that the nature of inflation in the US and in India is different. In India, it is primarily supply side driven and driven by external headwinds, whereas in the US, it is a combination of both supply side as well as demand side. Because during the pandemic time, the US government announced a number of fiscal packages to put money into the hands of people. So that led to a spurt in demand. So as the economy opened up, there was an increase in demand. So there it is demand plus supply side driven, whereas here if we look at some of our demand side indicators, we are still on our demand has not yet picked up. So that is point number one. The second point is, yes, to some extent, till February, if you see the RBI statement, they were still focusing on growth.
Yeah.
They were focusing on revival of growth. It's only after the Russia-Ukraine war that the focus has shifted to inflation. Their guidance has changed. So to some extent, during the pandemic time, their support was towards growth, even though inflation was rising. But at that time, the narrative was that this inflation is transitory, it is supply side driven. But now that it is getting broad based, and therefore now RBI has changed its gears and shifted its focus from growth to inflation.
In fact, that is what the Governor Das was saying this morning, saying during the last 2 years, we had to support the revival of growth, and we had no other option. So we could even live with that bit of inflation because our priority was growth.
Yes. So, that was needed to support, to give credit, and we did see some of the good impact of that on credit and the kind of provisioning that were given to banks so that they can support credit growth. So in fact, most of whatever steps were taken were primarily to support growth were taken by the RBI, in addition to the Atmanirbhar package of the government, and that too
PLI
again were
scheme,
mainly on the credit side, which is again the area of the RBI.
Ranjit Dighe's question is, will the US rate hike cycle lead to a scaling back of the over-financialization of the economy? What does he mean by over-financialization of the economy?
So what I understand is the share of financial sector in the
American economy.
in American economy. So I think the first impact will be that lending and borrowings will become more expensive, and we have already seen, because there is a very quick transmission as soon as the US rates are raised, the mortgage rates and the home loan rates start rising. So that would lead to some cooling off. I would not say reversing of the over financialization, but it will lead to some cooling off of the demand for loans, because of the eased monetary policy, there was this, banks were also lending, but now that will go down because interest rates will rise up drastically. So it will lead to some reduction in the demand for funds by the households and by the companies.
Ganesha VS asks, how much could the rupee fall from the current situation? Are there any plans from the RBI to arrest the slide? You already answered that, saying 79.80 is a possibility. And RBI has already been intervening, selling dollars to stop the slide.
Yeah, RBI has been intervening in both the spot as well as in the forward market. But the point to note here is that, when RBI intervenes, then what has happened? Is it a very good thing? Because when RBI intervenes, what RBI is doing is that it is buying dollars and it is releasing rupee into the economy. So that will further lower the interest rates and further lead to an outflow of dollars. So all those careful policy choices need to be made, and we do think that RBI will not do a very aggressive intervention, and if there is volatility, then RBI will intervene. But 79 definitely the rupee will touch, given that there is no end to this escalation and geopolitical conflicts.
Prakriti has this question. Should this even be a surprise with such record inflation? I mean, should we be surprised?
It was a surprise because till from 1994 we had not seen such a high interest rates hike. So, and because the inflation is too much higher than the US target, so that is the reason. But the point is that till now they were expecting a 50 basis point, and some are now even expecting a 1 percentage point hike. So each change in the interest rate expectation feeds into a number of other interest rates. It feeds into consumer expectation and a lot of other things, and therefore that creates a kind of panic for the market that how much the Fed is going to increase, where it's going to increase by 75 or 100 basis point, and that leads to tumbling or rising of the market. What we did see was that just before the Fed announcement, markets were in a panic state and markets were falling. So all these things do affect the market. They affect the sentiment. They give a kind of indication that inflation is entrenched, and therefore the Fed is increasing the rates by a very huge quantum.
Prithvi has this question. Has money printing led to this? I suppose he refers to printing of dollars in the US. And does this weaken the USD over the long term in the hegemonic sense? Will this benefit China?
So, 2 points here. One is, on the first point, yes, during the pandemic, they did increase the demand by putting more dollars into the hands of people. So that is number one. What is happening now is that if you look at the composition, hegemony of dollar, yes, it's a very interesting question. And now what's happening is, if you look at a number of papers of the IMF on the composition of global reserves, how much the central banks are holding different kinds of reserves, we see that the proportion of dollar is coming down. So that is a very interesting development. It needs to be seen whether it is sustained or not. But given that the kind of volatility we are seeing and the kind of problems the US economy is passing through, we are seeing that the dominance of dollar is slowly eroding in the overall composition of reserves.
Two last questions, Radhika. This one is from Aditya Tandon. What is the primary driver of supply side inflation in both the US and India besides food and oil?
Besides food and oil, it's fertilizers, it's input costs, it's metals, various things. Because whatever the commodities that Russia and Ukraine are exporting, those are all subject to disruption. So even we have to understand that even before the war, there were supply side disruptions, and they have got aggravated due to the war. So in addition to food, crude oil, edible oil, it's also fertilizers, because fertilizer raw materials are exported by Russia. So that is also one reason, and that then feeds into food inflation. Metals, again, a very important raw material that goes into automobiles and other sectors. Machinery, so that is also affecting their input cost pressures. So overall, there are a lot of things that impact the supply side.
Inflation. Last question from Kiran Prasad. How is the RBI going to tackle the slide? In case there is recession, how will it impact our economy? Which we have already tackled by saying, demand for what we export and will get obviously affected. With inflation due to global conflicts and bad economic policies, what is the way forward for job creation in India? Very tough question.
So again, the way we have concluded the article is that there are a lot of uncertainty, and therefore the economy and the policymakers need to focus on macro fundamentals. They need to focus on inflation targeting. They need to focus on not imposing any knee-jerk policy reaction, and focus on steps that lead to greater formalization of the economy. And about employment, and those are all measures that need to be taken in tandem, regardless of whether we are facing these supply side disruptions or not. And formalization of the economy needs to be done, because if you look at the recent PLFS survey that was released by the government, we did see that the employment has increased. But if we look at the composition, it's mainly agriculture driven, and it's mainly it's not a very healthy mix of employment. So those are the challenges that were there even before the Russia-Ukraine war, and therefore they need to be tackled simultaneously with appropriate policy responses.
Thank you so much, Radhika. We have a couple more questions, but I'm unable to take them. We are running out of time. We will be hopefully back next week at the same time. Until then, please read the print, watch our other videos, and subscribe to the print if you've not already done so. We need your support. Thank you so much.